Hey there, everybody. It is 11:06 a.m. Central Standard Time here on Friday, the 29th of October, 2021, in a beautiful but cool outside Bernie, Texas. Man, I'm Christopher Inks, and this is, I'm from Texas West Capitol. I can't even think this morning, guys. It's been a crazy day. We had an inverted yield curve coming in. I mean, yesterday, it's just, man, lots of stuff happening right now. By the way, we've just hit the 92nd anniversary of that large October drop there that led into the Great Depression. So, man, crazy times going on right now. Hope y'all are doing all right. I know a lot of people got wicked out there on that the Bitcoin move yesterday. So you guys got to be careful about that. What's going on there. What's going on, Hank, Bill, Bianca checking in. Let's see here. Ready for the big draw, she says. Fingers crossed, candles burning, rabbit's foot's chopped off. Poor bunny. Everybody always says the rabbit's paw is a lucky, a good luck thing, right? I always say for everybody but the bunny, right? Hey there, Data. Good to see you. Ventru is here. Header is here. Chris Baker, what's up, man? Hey, I appreciate you, buddy. You made so much money with Tier 3 this year. Loving it. Man, I love hearing that. And we continue to get comments like that, guys. And, at the end of the day, you got to decide what you're going to do. Most people say, well, you know what? I don't want to spend the money to learn how to do something correctly, to decrease the time it takes me to be successful at something. And so you go on and, you end up wasting a lot of money, hopefully learning how to do it at the end of the day. But most people don't. Most people end up just losing a lot of money and don't really learn. For the few of you out there that are smart enough to do it, you jump in and you say, I want to find somebody who can help me out and, figure out what's going on here and help me understand so I don't have to make all the mistakes that people generally make. And that usually leads to some pretty good results. Again, guys, I do that in my personal life. If there's something I want to learn how, I find somebody that knows how to do it really well and I pay them to show me how. It just, I don't, when I look at it, my time is worth money. And, I don't want to waste all that time making mistakes, especially in trading because it's losing money, right? And so even if you end up eventually learning how, your capital account has depleted quite a bit by the time you do. And so that's always a difficult thing because then it takes even longer to make it back up, right? So, yeah, that's why we're here, guys. And, either you're going to do it or you're not. I have no love loss, for people that don't. It is what it is. It's your decision. You're an adult. Make it up and go, okay? But if you are interested, of course, we are here. And, I take it seriously what we do, guys. You can talk to anybody that's in there. Like I said, I think the biggest thing we got going for us and, saying that what we do is pretty legitimate is the fact that people stay with us for years. You're not going to sit there and keep paying something, especially, the prices we charge for years if it's not working for you, right? So there's what it is. So you can join us at howtotradetowin.com. By the way, guys, right now, now that, as I'm talking about this, as I mentioned here, we do have this discount at the moment right now. And so you can use this tier 3 _ 50% off at the checkout to get your first month of tier 3 access for half off, guys. And you know what? Even if that's all you ever do, just come in prepared to soak up as much as you can because we got well over 130 hours of video education in there, guys. And it just along with everything else. And so, I don't want you coming in and just kind of goofing off because then you're not going to get anything out of it. Come in ready to soak it up as much as possible, especially if you're only planning for doing it for a month. But you can get enough in there that can really set you way further ahead than you start. Just by doing that. Learn a lot of the basics and stuff that'll keep you from losing a lot of money that you shouldn't lose, as well as, again, going on to more advanced stuff that we have there as well. So be sure you take advantage of it, okay? It's the 1 month tier 3 membership, and you can get 50% off that, okay? Excuse me. And again, you do that over here at howtotradetowin.com. That's where you can do that at, okay? Who else is here already? We see Aramis is checking in. Evolution's here. Who else is here? Telluride, Mike Slane. Happy Friday, my friend. Glad to have you here. I think I said hello to Hank, but Hank, you know what? If I missed you, man, hello. Good to see you checking in here. He says Bitcoin's on its way. Be aware of stop hunts. As always, of course, right? And by the way, if you guys don't think what we do really means anything, we've actually got a member who took a job who actually was came through us, learned from us, went on, and has now taken a position with a trading firm. So, yeah, what we do really does work if you're willing to listen, if you're willing to be open-minded and understand that you probably don't know what you think you know. If you're willing to do all that, guys, you can be successful at it. You can go on and get your positions with trading desks as well. It's not a bad way to live, honestly. Let me see here. Bill is convinced that you can cover everything in Tier 3 in 1 month if you don't have any sleep. I'm not even sure if you could do it without sleep. If only that was a possibility, right? Yeah, man, it was pretty cool. He let me know that he got that, and it was pretty exciting. We've got some more stuff coming out this year, guys. I'm actually working on putting together a prop firm educational thing. So basically, usually I don't talk about systems and whatnot myself. I'm here to just kind of tell you how to use all these things and how to do them effectively, and kind of allowing you to figure out what works for you. But there is a certain way that you can trade that has a pretty great return on it. And I'm working on putting that together as a course that I'm going to sell separately. And so what I'm thinking about doing is maybe doing a pre-funding. So giving you guys a significant discount if you purchase it ahead of time. And then when it comes out, of course, everybody's going to have to pay like twice that to get it. But, it just kind of takes in a lot of what things that I've learned over the years into a system that actually works. So if that interests you, keep paying attention. I'll let you guys know about that, all right? Hey there, Hangry Patrick. Good to see you. Michael Williams checking as well. I think I said hi, Michael, but hey, hello again. So anyway, yeah, do that there. Now, here's the thing, guy. What do we have going on? Like I said, we've got the inverted yield curve. If you guys don't know what that means, shame on you. No, not really. Basically, everybody used to think it was all about, money supply. And everybody still kind of thinks that. They're still like, oh, this money's being printed, There's so many things. And that's why they're screaming hyperinflation, guys. And I'm still getting kickback on my comment to, my reply to Jack's hyperinflation comment. I'm still getting, kickback on it. And sadly, again, guys, most of the time it's people coming up there and they just they're really derogatory, right? They call you names and whatever. And when you see that, you start to understand that this is the way that people generally are. They're very resistant to accepting the fact that maybe they don't understand what's going on. And, it is what it is. Guys, it's up to you to decide if you're okay with that or if you're going to go on and actually do something about it. I mean, because it's completely up to you, right? It's completely up to you whether you learn, whether you're open to learning and understanding and maybe accepting a different or even listening to a different view and really kind of thinking about it, or if you're just resistant. Most people are resistant. It is the way it is. But that's not going to make you money in the world, guys, okay? It's precisely the fact that we're so lacking of getting in and doing those, of changing our thoughts, that causes us to lose money in this world, okay? So, be it what it may. Again, as I mentioned here, the yield curve inverted. It was the 20 and 30 year. And so what that means is the short end of the curve, the front end of the curve, which is, the curve itself is the 30 year, right? And so the shorter term rate gets higher than the longer term rate, right? And so that's what happened. So basically the 20 year paying out better, interest rate wise than the 30 year. And that's troubling. Now, first of all, you guys have to understand, first of all, the U.S. just kind of implemented this 20-year rate, here, what was it, just last year, I think, 2020? So it's brand new. It's never really gotten a lot of traction. So that could kind of contribute to it. But the reality is the rest of the curve is flat. It's getting pretty flat right now, which means they're nearing that reversal, right? And it's not just in the U.S., it's everywhere. And so what does that mean? Well, it means that that people in general see that inflation is going to start dropping down. That's what they're betting on. They're betting on the inflation is going to start dropping down. And usually, that entails the central bank raising rates, right? And so all of a sudden, you get this higher rate here in the front end versus the back end. That's what gets you that flip there. Here's the thing. It doesn't, an inverted curve does not guarantee that there's going to be a recession, but it has predated every recession since 1956 here in the U.S. Every one since 1956. There is an average of a 14-month lead time, okay? So when it inverts, on average, it could take up to 14 months before the economy hits that recession, right? A recession is what? It's two months, one after the other. I can't think of the word I'm trying to use here, where the GDP is falling, right? And so what you're saying is, okay, so it doesn't have to happen tomorrow. Now, that doesn't mean it can't happen tomorrow or, in a month or whatever. It just says on average, historically, it's an average of about 14 months lead time from that. It did happen. We last time it happened was 2019, just less than a year before that March 2020 drop. So, it does happen. It happened there again prior to 2008. Again, before 2000, whatever that was, 2001 there, 2001, the tech bubble, and so it's always been there. Again, it's not a guarantee, but historically, since 1956, it has predated every one. So what does that mean? That means interest rates rise, right? This is something we've been talking about. Now, if you've been following me since 2018, some of you have, you will remember that back then, I'm actually pretty good at this. So you'll remember back then in 2018, about the summer of 2018, I believe it was about July or so. Let me kind of pull this over here. So this is the federal funds effective rate here, okay? And so back here in right around this area, right around July or so of 2018, the Fed came out and said, listen, we are expecting to drop the interest rate to get like 4 or 5 cuts by the end of 2019. That's what they said there, right? And I said no. I said, as a matter of fact, not only are they not going to cut it, but they're going to raise it. That's what I said. And exactly what happened here, they raised it into 2019 there. Okay? Into the summer of 2019. And so why does that matter? Because again, if you guys have been following me this year, I've been talking about the fact that we're probably going to get interest rate hikes much sooner than what the Fed says they're going to do. The Fed keeps saying, trying to push it off a bit. They did toward the beginning of the year. There was like, oh, it's going to be a bit off, and then as the year kind of progressed, they're like, well, okay, maybe a little bit sooner. But then they kind of trying to focus on taper, right? And so here we are now with this inverted yield curve suggesting that rates are going to pop up a few times next year. So again, I tend to be pretty good at this. If you were following back in 2018, I know Hank was there back at that time. I think Bill was as well. You might remember that this happened, that what I talked about here. Again, same thing looking like it's going to happen here, that the Fed's going to raise those rates. People say, well, how can they raise that rate? It's going to cause all these issues, blah, blah, blah. Well, how can they not? They have to. This is that thing I talked about. I said earlier this year, the Fed is painting itself in a corner, and it's going to have to raise rates regardless of whether it wants to or not. And I think that's, exactly what's coming up here. So, we'll see what happens there. But, again, an inverted yield curve, and it is the 2030. So, it's not guaranteed that a recession is going to happen. But again, this has preceded every recession since 1956 here in the U.S. And, even if you don't want to look at the 2030 because of the, just the inability of the 20 to really kind of get going there, the fact that the rest of the curve is flattened out. And again, not just here, but you're looking at all over the world. So you look at what happened in Canada. Canada all of a sudden surprised everybody with what they did, right? And then we had Australia just, what was it, yesterday or the other day or whatever, not protecting their rate, right? So everybody's like expecting these interest rates to go here, right? And so next week, the Fed comes out with their talk. And so the expectation next week with the Fed is, hey, we're going to start tapering. Which, again, taper doesn't necessarily mean that they're going to raise rates. But the understanding is that if they taper, that's going to lead to raise rates, which is what I've been talking to you about. And that's what everybody's getting ready for, right? But the Fed itself is not going to want to be left behind. It's not going to want these other countries to start doing that prior to them. I don't believe, anyway. And so I think they're going to be forced, they're going to be forced into doing it. Everybody's hooked again on hyperinflation because of the money supply. And even the Fed, I think there's something here. Let me see here. I've got something from the Fed here. So, everybody's always like, oh, okay, so the money supply is going up, so that means hyperinflation. That's silly thinking, guys. That's lazy thinking, okay? That's a choice not to learn, right? Not to understand more. So, let me see here. So the Fed itself even says on its site here, federalreserve.gov, right here, it says, let me see here. Over some periods, measures of the money supply have exhibited fairly close relationships with important economic variables, such as nominal gross domestic product and the price level. Let me see here. Being based partly on these relationships, some economists, Milton Friedman, if you know who that is, Chicago School of Thought, as far as this kind of stuff goes, right? He says, have argued that money supply provides important information about the near-term course for the economy and determines the level of prices and inflations in the long run. So central banks, including the Fed, have at times used measures of money supply as an important guide in the conduct of monetary policy. Over recent decades, however, the relationships between various measures of the money supply and variables such as GDP growth and inflation in the U.S. have been quite unstable. As a result, the importance of the money supply as a guide for the conduct of monetary policy in the U.S. has diminished over time. So they say that the FOMC, the monetary policy making body of the Federal Reserve System, still regularly reviews money supply data in conducting monetary policy, but money supply figures are just part of a wide array of financial and economic data that policymakers review. Why is that? Because it is not in and of itself what determines things. Most, least of which is hyperinflation. Okay? So, again, if you don't have, a PhD in at least some kind of advanced economics degree, some master's in economics, if not a PhD, and you're arguing something that the Fed is saying, listen, we are some very smart people. We're some of the smartest people, in the world as far as this goes, and we don't really see that it has that significant an impact, especially not by itself. And yet you're arguing that it does. And you say, but look, the Fed got it wrong here and here. And I'm saying, even if the smartest people around are getting it wrong, then maybe you, without your level of understanding, probably is going to get it wrong as well in your thoughts, right? I mean, this is where I keep telling you guys, whether it's in trading or in life, be humble. Understand that you may not understand what's really going on. All right? Because as long as you can continue to get out there and flaunt, your lack of knowledge in a subject matter, it's just going to make people just kind of shrug away from you. And especially if you do it online. Yeah, people, look at this, guys. I've got a master's in applied economic psychology, okay? This is an understanding. What this comes out to is an understanding of why people do the things they do when it comes to economic things that we study, right? And so you get somebody who doesn't even, again, guys, I'm not just saying that having a college degree makes you something better, but what I'm saying is if somebody does have a certain level of education that you don't have in a specific subject matter, then maybe you should listen more than talk. Doesn't mean they're going to be right, but it means you should be listening instead of just immediately throwing it out as if it's, doesn't mean anything. Now, again, as I said there, that doesn't mean I'm going to be right. I've got a pretty great track record, though, dating back, since 2008, right? So, again, called that top. And then after that, where everybody was yelling hyperinflation or strong inflation because of the money coming in, QE, I would say, no, we're not going to have that, right? And we didn't have it. And now we're here where we are. And, again, maybe I'm wrong, but so far my way of understanding things seems to be working out. So we'll see what happens here. At the end of the day, guys, what I'm trying to get across here is being humble in that maybe you don't know what you want to swear if you don't have any background in it. Okay? Anyway, I know you guys don't do that, right? You don't go act stupid like that, right? I know you guys. You're good. Let me kind of catch up with you guys right here. Let me see. Let me kind of catch up with you. Hank says people seem to think you can have a global hyperinflation. Yeah, well, and a lot of what this comes off from, guys, is that you come into Bitcoin and you start buying that maxi narrative. And the idea that Bitcoin's going to become this world reserve currency, which, again, I don't really believe is possible, just based on, governments and this idea that people, tend to clamor towards some kind of master to tell them what to do kind of thing. So they don't have to think about, or they don't think they have to think about their security or their banking. Again, with Bitcoin, it's this, be your own bank. Well, people don't want to be their own bank. In general, people don't. They just don't want to have to think about it, right? The government, especially here in the U.S., we've passed since 2001 when we had, 9/11. We passed the Patriot Act, and I warned against that when it happened. And it's just a big usurpation of power by the government. And but it was based on this guise of national security, which is what it usually is when it comes to governments, right? It's security. People don't want to worry about how to protect themselves, right? And so, anyway, so we get to this. And it's just the nature of people, guys. It's just human beings. They tend to clamor into groups, and they tend to want leaders so they don't have to consider these things. And so when you're trying to push Bitcoin, you say, be your own bank. People don't want to be their own bank, guys. They don't want to. But, again, when you're looking at that, a lot of times, especially if you're new, there's a lot of exciting things that people say about Bitcoin, and you're like, yeah. But a lot of it doesn't really make a whole bunch of sense realistically. And that's where you have to kind of pay attention. But that's what leads to the ideas of, global hyperinflation and a lot, because the idea is, all this fiat money is going to go bad, and then Bitcoin's going to be the king, and I'm going to be so rich. That's what it all comes down to. And I would suggest that maybe you don't necessarily think along those lines. I think it's a lot more likely to lose you money than make you money with that. You guys have to be realistic in this world. But most of what goes on, especially in social media, is not realism. It's not realistic ideas or anything like that. So I want you guys to be careful with that, okay? Hank says he's joined the battle against the abuse of the term hyperinflation. To be fair, I included supercycle in that battle too. Both are hyperbole. Let's see here. Yes, Mark. What's going on, Mark? Good to see you. He says people think they can have their cake and eat it too. That's what we all want, right? I'm not going to lie. I wish I could have my cake and eat it too. It'd be a nice way to live. Instead, I usually have cake and then my son gets it. It is what it is, right? Let me see here. Just buy a cake NFT and eat the cake. Hey, Claudio and Jared the Great. What's going on, guys? Good to see you here. Oh my gosh, you guys are so bad. Yes, 2 consecutive months. Thank you, Bianca. I was so bad on that. 2 consecutive months of a drop, right? To lead to a recession. Oh my gosh. Bill says there's a lot of talk here in the UK about an interest rate rise next week. Yeah, so the UK has been one of the more aggressive, as far as potential rate hikes as well. Yeah. Not the ECB, but the UK. So, yeah, definitely something to pay attention there. Mark says when Chris speaks, the markets listen. Nah, people ignore me. They make fun of me. I've got years of this. It's funny because it usually turns out more or less correct, the things I say. But, again, people think that these big macro terms that I discuss, these big macro ideas I discuss, if they don't happen that next day or that next week, people then are like, you were so wrong. It's just, again, it's a lack of understanding, guys, especially when you talk about these larger kind of ideas. They take time, man. They take time to happen. I mean, you've got this 12-year secular bull market that we've had here in stocks and everything, and it doesn't roll over overnight, And especially when that's a bigger part of this 233-year cycle, it takes a little bit longer. Has it taken a bit longer than I thought it would? Yeah, it has. But it doesn't mean it doesn't mean I'm wrong. It just means that I'm a little bit early. And, the hardest thing to understand for new traders especially is this idea of timing market tops and bottoms. It's really difficult to do, no matter how long you've been doing it. It's rare that you do it. The idea is to understand what's going on and to pay attention to it. That doesn't mean you have to stop. I've never once said you need to go all, you need to get out of stocks and go all into bonds or whatever at any point. I've never actually said that, right? I've always said, listen, this could be a top coming up here, but we need this to happen. And if this doesn't happen, but this other thing happens instead, then guess what? It's not a top. We're continuing higher. Most people don't want to pay attention to that, though. They just want to say, oh, look, there wasn't a top. You were wrong. Don't be those type of people, guys. That's going to lose you money more than anything else, because you're going to be one of the ones that sits in there and thinks the market's going to keep going up forever and ever and ever until all of a sudden it leaves you behind. And then you get scared about getting out because you think it's going to keep going higher, and then it keeps going lower. And then all of a sudden you're losing money. You're thinking, man, it just needs to get up there so I can get out at that higher rate again, and then I'll be out. And then it starts to rise a little bit. You're like, oh, thank God. And then boom, drops even lower again. You're like, what? It's all psychological, guys. It's all psychological. But this is sadly what's going to happen. Most of the people that have made decent money here in Bitcoin and crypto and in the stock market, here over the last, especially last year, I can all but guarantee most of them are going to lose it. Because there's no real understanding what's going on. They're getting in a frothy market where everything just tends to continue to go up. And they think they know what they're doing. They think they understand what's going on. And then they hold too long. They don't get out in time. And that's what's going to happen, unfortunately. And no matter how loud I yell, no matter how loud I scream, no matter how many times I get out there, very few are actually going to listen to me or are actually going to pay attention. Everybody's concerned about missing some movement. Everybody wants to grab the absolute top, which professionals don't even do on any kind of regular basis. And yet you think, as somebody who comes in and has no clue what you're doing, let's be honest, has no clue what you're doing when it comes to the market, and you think that you can do it. But this is what happens, guys. I tell you that this is what happens every time, every market's top in every market. That's what happens. Don't be one of those people, okay? Diego, what's going on, man? I see you. Let me see here. Let me kind of keep on checking in with you guys here. Block Tech, what's going on, man? Silvio checking in here. Man, so many of my favorite people always checking in. I love it. Hank says, but that would mean that Chris and I agree. Quick, exit all markets. Let me see here. Yeah, we'll check out the DXY in a minute. A nice run up today. A nice impulsive breakup today. So we'll take a look at that. It looks like perhaps a Coinbase whale was watching my previous Bitcoin descending channel and smashed a buy this morning at the channel top retest. I don't know, man. I know it's been that was some craziness right here, right? So, what we had this descending kind of resistance thing going on here. I think it was actually probably something more like this. There was a different channel. That's what it was. So it was like this here. And I had this previous channel, a little bit different channel on here. And so it was talking about the breakout here, may lead up to, the channel resistance. But we needed the breakout of the channel resistance, and that follow through is what you need to kind of get your channel target, right? And we were still looking at the possibility that maybe the bottom was here, but maybe it could still be lower, right? There was anything telling us that it wasn't either way. And so we got the breakout, and then price here really took off at the point. Let me see here. Let me see if I can draw this channel on here. Was it this, I think, maybe? Let's see. Oh, let's see here. Yeah, this was the channel. So this is what I had, okay, this black channel right here. And so it was this breakout of the red line, and then you have this big, huge candle up on the breakout through the descending EQ, the descending channel EQ. And as I constantly tell you guys, when you use channels, no matter how you're trading, use channels, okay? Learn to draw them properly. And so what happens is when you get a breakout of the channel EQ, that usually gives you a target of the channel resistance. And so this is what happened. So if you're trading short term, you should have taken profit right here and then waited for a breakout to potentially enter again. I believe what most people probably did if they saw that channel is they held here and then they got knocked out by this right here, which then just rallied right back on up almost immediately. And then we started having all this back and forth above the channel, which is why I removed the channel, because I don't believe in this idea that that, goofing off around the channel, resistance or support gives you a strong, a significant area of resistance or support. If it is a significant area of resistance or support, you should break out above it or below it and remain above or below it. You shouldn't goof around it. So I've changed that this morning into this here, okay? And so basically, it looks like we've got our selling climax, we've got our rally here, we've got our secondary test in phase B here, we've got this move up, and then we've got this this spring here. And so looking at this, last night I talked to our update, and I said, listen, it seems like we should, because this volume was greater on this here than it was on the previous drop. I was looking at a different, was I looking at the 4 hour? Yeah, than it was over here, okay? So greater volume over here than what we had over here. So I said, if so, then, we might see price dropping on down in here. But I said, it doesn't have to. It doesn't have to. I said, what could have happened is that this kind of, these pullbacks here could be the test of this spring here. And sure enough, pulled back, much lower volume, pulled back again, much lower volume. That's a successful test of this spring here. And so this morning, I gave him this chart here, and I gave him this range, and I said, we're looking for either break down or break up. Simple as that. If we break up, it suggests that wave 2 is likely complete and we're heading up. But we still need to see a breakout here of this wave B resistance at 63,726.58. We have to get above. If we can get above that, then this is 3 waves down. Or it appears to be 3 waves down anyway. So, this is really where we kind of need to get through. Now, we've broken out above here, so based on the height of this channel, we got a target up here maybe of, I guess from where we broke out there, up there around 67,980 or so. If this is a 1-2 here, wave 3 has a target up here around this R5 pivot, about 78,750, 78,800, right there. So that's really what I'm looking at the moment here. I want to see follow through now. If we look at this, you'll notice this big volume, if you pay attention, this big volume is this little candle right here. Now, why is this important? So this is important because you have this this consolidation that happened here, right? Since they had this drop and this breakout, and then you had this consolidation that happened since yesterday, right? This is a significant spike of volume. Look at volume stays down here. This little candle, all this volume, and guess what? There was no follow through lower. As a matter of fact, demand came up and almost flipped that to a demand candle. Because there was no follow through lower, it tells us that supply that tried to come in there was wiped out. It was exhausted. And so then you got on less than half the volume, you got this nice large rally on out of there. There just wasn't supply to hold it in. Supply said, listen, I think we can push this down. Demand said, I don't think so. Ate up all that supply. Look at how significant this is, guys. This is the largest volume on the 1 hour that we've had since where? Since here. Since the 6th of October, this little rally right here. That significant volume. And little tiny candle, it becomes a doji with a long demand tail right there. Supply had no chance at that point there. And so again, boom, bounce out. So I think we should see this continuing to head up higher here. We've broken out above the 1 hour pivot here. We do have room to go on the Stochk RSI and RSI here. If we jump out of the 4 hour, the 4 hour still has room up here and overbought still to work. We're kind of making our way pretty, much more impulsively above that descending resistance there. Here on the 4 hour. Jump through the daily. The daily, again, is reset down and oversold. Cross bullishly, nearing a breakout of oversold. Bullish engulfing candle. Nice follow-through coming up here. If you look at the volume, again, you look at these two volumes here. Just slightly less volume yesterday, but complete flip. Supply and control here, demand and control the next day on a little bit less, slightly lesser volume. So, again, relatively, it has more effort, but a lot less result. As a matter of fact, no result at all for supply in that second candle there. And then here we come with the follow through today. I mean, and it's coming off here off the R2 pivot on the daily. You can see that we actually dipped down here to this previous resistance as support. I mean, everything screams price goes up from here. I can't guarantee it. Can't guarantee it. Nobody can guarantee it to you guys. But what you'll get, honestly, is a lot of people who try to come out here like me out here, and then they'll say, oh, I guarantee you it's going to go up. And, again, the likelihood is that it's going to, but they can't really guarantee that. You can't guarantee anything in the markets. But, if you're new to trading, you don't know this. You don't understand this. You just think, oh, wow, they said they guarantee it, and then it happens, so they can tell me what's going to happen with the markets. And what happens is you go in and you follow them, and you get in with the chance where they're once or twice right like that, and guess what? That's it. And you keep trying to follow them, and they start being wrong consistently, and you're losing a lot of money, and you can't get out of that habit of doing what they're saying. So, again, guys, understand that there are no guarantees in trading, but right now the likelihood is pretty strong that we continue up higher. But that's why we need these areas of confirmations. That's why we need confirmations. We need validation, invalidation levels, and that's why we use proper risk management, just to mitigate our risk a bit. So that way we're not just stupidly jumping in there thinking that things are going to do whatever whatever it seems like they're definitely going to do at that time, and then it doesn't, right? Am, what's going on there? Brian Riley checking in. Claudio, man, I love you, buddy. Is that Keith? You say you have a PhD of permanent head damage, which caused me to lose money? Here to learn from Chris and everybody else to be profitable. Yeah, that's the key, guys. It's just about, I'm going to tell you, I come in here, I do what I do, because, it's gotten to the point that I've been successful at it for a long time, right? And I believe I have, ways of looking at the market that I can help you with that, are going to help you be much more profitable as well. But, I'm just a man. I'm just a guy that does a thing, man. And I would never come up here and tell you that I'm definitely, going to be right all the time, or that I definitely know what's going to happen. I never know what's going to happen. I may have a feeling one way or the other, but we're always looking for other types of confirmation along the way. All right? So, like I said, earlier this year, we were talking about the interest rates, and I said, the Fed was talking about, at that time, they were talking about they weren't even going to raise interest rates next year. And I said, no, looking at, I was looking at things that were happening in the economy and this rally, this kind of reflation idea from the pandemic lows, and the inflation kind of running hotter, and all these things the Fed was saying. And to me, it seems like this is the, historically, what leads to actually rates rising, right? And sooner than what the Fed gives you. The Fed's always playing catch up. The Fed, everybody thinks the Fed, leads things, right? But the Fed is actually just reactionary, guys. The Fed reacts to what's going on. And so, didn't know for sure this was going to happen, but I felt pretty sure that it was going to. And here we get into this point now. Inflation's ran up even hotter. Then they're talking about tapering. And then they started throwing in the interest rates where, a few interest rate cuts maybe next year. And then now we're getting the inverted yield curve. So with what I was saying, there's more and more support here leading to the idea that they're going to raise rates multiple times potentially next year, rather than what they had said earlier this year, which was they weren't even going to raise them at all. So, again, guys, even with that, it's not that I definitely know what's going to happen. It's just that, again, I have this idea based on things the way they are. And then as it plays out, we gain support for that. It's the same way in trading. I have this idea that price is going to go up here, but, we still need these certain things to happen, right? Now, again, one of the biggest things that gives me concern is the idea that recessionary things that happen potentially leading to a Bitcoin and other cryptos being sold off. Because as I've explained over time and time again, Bitcoin, Ethereum, all these are risky assets, guys, okay? And so what you need to understand is, as I've explained before, when it comes to a recession, times like that, the risky things are what are sold off. Everybody wants to be safer, so they go to the dollar. The dollar is the safe place to be, right? Because you want to have cash. If things go to hell, you want to have cash. You want to be able, if you lose your job, if whatever happens, And in a recession where everything's losing value, where if you have to sell something, you're going to sell it for less than what you bought it for. Cash is king, right? This is what they do. Whether you want to think about it or not, whether you want it to be or not, it is the way it is. And I see too many people out there trying to argue against the way things are. And so, that again, everybody's got this. Everybody's been romanticizing the death of the dollar since the 70s, since the whole Bretton Woods thing. I think I said this last time. Again, everybody's like, oh, hyperinflation this time. Guess what? People were screaming hyperinflation in 2010 when they first started doing QE, because the influx of money, what the government was printing, or what the Fed was printing, was so many times larger than what we'd already had. And yet nothing, right? The Fed had a hard time seeing things remain above deflation, right? Very, very, very low inflation, right? Over the next 10 years, 12 years. And then it happens now. And so QE comes in again. Everybody's like, oh, again, it's all the same stuff coming out. And it's just, again, it's the same thing. Now, we can talk about transfer payments. We can talk about how, Lynn Alden is somebody that takes this position, that the 2010 was a recapitalization of banks. And then the difference between QE then and QE now is that we had more money coming out via transfer payments. And she's correct on that. But nothing significantly to lead to hyperinflation. I keep telling you guys, it doesn't matter how much is printed. It matters what happens with it. Right? You can print all the money in the world, but if it stays in the banks and it's not out there circulating the economy, then you don't have more dollars chasing limited goods. Okay? And so at the end of the day, out of how much that was actually printed, a very little bit of it actually came out as transfer pay, through a transfer mechanism that came out as payments in terms of, extended unemployment benefits, stimulus payments, stuff like that. It was really little compared to how much was printed. And so that's a big thing, but again, people don't want to listen to this. People don't want to think about that. It's never, when it comes to economics, guys, or global finance, global interconnectivity, all that kind of stuff, it's never as simple as you think it is. Because it is a very complex system with lots of inputs. And just one or two of those inputs changing may have a different effect on the overall what's going on. So when you've got 10 or 15 different inputs that are changing, some getting greater, some getting lesser, and they're conflicting, it's not as simple as, oh, we're printing money, so, inflation, so hyperinflation, so whatever. Just want to make sure you guys got that. Hey there, Boris. Happy Friday, my friend. Good to see you. AM says SHIB outperformed a Bitcoin. Yeah, we might take a look at SHIB here in a minute as well. Let me see here. Brian Riley says the government doesn't want you to be your own bank either. No, they sure don't. Again, guys, as I warned, this is something I warned back in 2018. I said this next bull run is likely when we were going to see central bank coins coming out and serious talk about it. And we were going to start seeing, a lot more involvement by government, regulation, stuff like that. It was the way it was. And so here we are, and that's what we have, right? And no, the government doesn't want you to, because as I explained before, the idea of the government is that they want to be able to have control. Okay? And so blockchain technology actually gives them a lot more control. If I give you a $5 bill, I've said this so many times before, or I give you a $100 bill, or I give you 100 of those $100 bills, as long as you don't deposit that in a bank or anything, there's really little way to track you. There's a little way to track you. But if that's all on a ledger, they can see where that money's going. It makes it easier to track you and what you're spending and whatever. And you say, okay, well, that's not a big deal because I'm not doing anything wrong. Well, yeah, that seems legit, right? Until you figure out that whoever's in power has their own agendas. And we know that historically government power has been abused by those in power, right? We know that it's been used to marginalize groups and whatnot. And so what if you, not thinking you're doing anything wrong, and somebody gets voted into office that thinks differently than you about things, and they start seeing that maybe you're giving money to a certain group, or that you're spending money on a certain thing. Maybe you're spending money on alcohol, and they say, you know what? You shouldn't be drinking. Drinking's bad. You shouldn't be smoking cigarettes. Smoking cigarettes is bad. By the way, I agree it's bad. It's disgusting, but whatever. I don't do it. I'm not here to tell you you shouldn't do it, right? That's your thing. But here's the thing. If all that's going in there, all of a sudden whoever's in control, in power, can then use that to put you in a special group that they watch and that they can maybe target. Guys, it's the way the world is. And if you don't believe it, you are naive. Don't be naive. Take it from somebody with a law degree. I'm telling you right now, the law is not designed to help you. The law is designed to punish. Okay? That's the end all be all of it. Law in any country is designed to punish. Whether it's you personally or a specific group of people, because guess what? In order to give one group of people privileges, you have to take some from another group. You know, you can't just say, oh, this one group especially get this without harming another group. Okay? So, you know, it is what it is. That's kind of where we're going. And, you know, of course the government doesn't want you to do that. But they want you to use their government coins, right? Their central bank coins. Because, again, that's a ledger that they can control. It's a ledger they can, you know, follow you on and whatnot. Bitcoin is not under their control, right? So the idea that Bitcoin's become some reserve currency doesn't really make a whole lot of sense. Okay? Governments would not allow that because it takes control away from a government. Governments have never given back power. They always take and they keep and then they take more. You know, as you become more powerful, you become more, God, I hate when I can't think of the words I'm trying to say. Paranoid. I studied this as a graduate student. And so, you know, power seeks to gain more power. And that's a branch of it being kind of paranoid. It's a product of it being so paranoid. Because when you're in control and you want to be in control, you worry about losing control. And so how do you keep from losing control, do you think? Well, you gain more control, right? And so it's just this never-ending thing until it just, boom, and it dies off. And then somebody gets in and guess what? Power all again. Historically, that's the way it's been. That's kind of where we're sitting there. Let me see here. World of sound bites kills intelligence. Agreed. Sound bites, I've been warning you guys against it for so long. They're especially prevalent, however you want to say that, online, in social media. If you find yourself retweeting somebody's soundbite without thinking about it and really kind of doing some research on it yourself, you may be part of the problem. The good thing about that is you can change if you choose to, right? It's not an end-all be-all. So my hope is that you will, okay? It doesn't mean that necessarily the soundbite might be incorrect, but most of the time it's either incorrect or partially incorrect. And with the way people's attentions are, they're going to take it as fully truth, right? And how does that help anybody? It doesn't, right? Let me kind of catch up with you guys here. I see Leighton's here. What's up? I see, let's see here. Hunter's saying Norway raised rates by 0.25% not long ago. They wanted to raise 0.5%, but said that would be too much in regards to the other countries. Yeah, you know, everybody kind of doing that thing there. Sure. Eureka, what's up, man? Let me see here. Oh, kind of keep with you. Hank says DXY strength can also be the weakness of the euro. Okay. Because tell you right about this, and how long can Bitcoin show strength along with the DXY? So if we jump over here, guys. Real quick here. Here's the other Bitcoin chart. The other one I was using still here. I mean, we fell down below this little support here, but all we did was dip below the R2 pivot again, just hitting that previous resistance. And here we go, rallying back up. I mean, if you know, again, same chart I've been using in the newsletter here since the beginning there, since back over here. Great rally. Everything's doing fine. You know, doing what you expect of it. You've got the appearance of three waves down here. So again, breaking out of this swing high up here at 63.726 and 58 cents should keep that as three waves and continuing higher then, right? So, yeah, you know, again, looking up toward that, $80,000 level, $79,000 level, heading up there. DXY though, man, look at that DXY rally this morning. Look at that. This is the 1 hour chart. That thing just took off like a scalded cat. I know you guys love that that thing I say, right? Anyway, and so it looks like we've got ABC is complete here. And then we've got this huge rally up here, which is above that wave B there. We've broken out of the descending channel resistance here. That gives us a pattern target of 0.821 above that. So that gives us a pattern target of around 94.725, which gets us, excuse me, which gets us almost to that 94.742, that wave 4, you know, that first clue that the macro bottom may be in January. Remember, that's that wave 4 target there, 94.742. So that's where I think we're headed here. I've got this potentially as a fifth wave going on here, and as a fifth wave, it has a target up here of about 95.479 expected target there. Now, how long can you know, the DXY and Bitcoin continue to go? You know, this is something I've talked about before. You know, in the grand scheme of things, let me kind of take this other DXY chart here. Look at this great chart. So in the grand scheme of things, again, this is that wave 4 level we're looking to get across over here, up here. And so what happens is, as you can see here, this really is just kind of sideways from back here in September of 20. Okay? This has really been sideways. So, you know, anything that's valued against it could continue to rise. You know, it just makes bigger moves on the pullbacks. It makes bigger moves up on the pullbacks, you know, when the dollar's doing it. But once you start getting, I think, above that level, then it starts becoming harder. So, you know, again, it's limited time, I think, that Bitcoin has that it can continue to go up. That's why I still think we've got an end of the year top, not a, you know, summer of next year top. And maybe I'm wrong. I could be wrong, guys. You know, again, you know, the idea is just that it generally moves opposite of what's going on with the DXY, but Bitcoin will continue to rise until enough people have decided, or enough money has decided, that it needs to stop rising. Until enough money comes in, right? And so it doesn't happen right away with the dollar. People stay in and they'll ride it and push it up to the extremes until it crashes against them, and then they'll jump in, you know, with the crash and send it down further, and then, you know, again, that's just what happens. So how far can it happen? Or how far can it continue? I don't know exactly, but, you know, again, my first thought is, you know, as it typically does, sometime here in the next couple of months, you know, the top of Bitcoin comes in. Now, I would not be opposed at all to Bitcoin and other cryptos continuing up into summer of next year. I would not be, you know, upset at that at all. I think that'd be fantastic, because it just means, you know, again, my investments are going to rise exponentially higher. But I'm not banking my money on that's what's happening. I'm taking it step by step. First step is Q4 of this year. We'll see what happens then. We'll see if we continue up higher there. But during that time, it looks like we should continue to see the dollar rise. So we'll see, you know, as it does that. Let me see here. As Hank says, DXY strength can also be the weakness of the euro. Yeah, you know, as I've talked about, guys, the DXY is just a weighted basket against multiple currencies. The euro is the largest. The euro's value, the euro USD, makes up almost 58% of the weighted value of the DXY. Second is the USD yen, which makes up about 11 point, I think it's like 11.8 or something like that percent. And then after that, everything starts dropping down to around 5% or less, basically. The rest of them that are in there. You know, USD CAD, the Great British Pound against the USD, stuff like that. So basically, your DXY is going to be a mirror image of your Euro USD. And so, you know, it's just important to watch there. You know, if the dollar continues to rally, there's no expectation for the euro to rally. The euro should continue to drop. You know, again, if the euro's rallying, we should expect the dollar in general to likely drop. Okay? Because the euro USD makes up almost 60% of the value of the DXY. And everything else is so much, you know, smaller, so much more Insignificant. So yeah. Hey, some risk. What's going on, man? Right now, our inflationary pressures that we're seeing right now. Oh wait, okay, I see what you're talking about. Let me see what y'all are talking about here before I go on with anything I'm trying to say here. Oh, you're talking to Hank. Okay. Because Hank is saying you can look at other signals for inflationary pressure, but I don't really see any except on crypto Twitter, CT, crypto Twitter. Let me see here. Let's see here. Yeah, I mean, the government's got its own, looks at inflation, as far as CPI and all that other fun stuff goes. Asum Risk is saying costs in every industry we work with are up 40%. Yeah, well, again, you're going to get that. We have a shortage, right? A supply bottleneck, right? And so that is from production and from delivery. And so prices necessarily going to go up, right? And we did have, again, a small bit of transfer payments, coming from what the Fed printed over to, again, through unemployment, extended unemployment benefits, which are over now, through, what is it called? Stimulus payments, which seem to be done right now. We haven't had another anytime soon. People didn't have to pay. Again, I think I pointed this out last time. People didn't have to pay for the longest time. They didn't have to pay their mortgages, their rent, or their student loan payments, right? Now, for most of the country, the mortgage and rent moratoriums are off, right? So people have to pay again. So they have to pay again. I'm sorry, guys. I'm not feeling so well for a minute there. Whew. Give me a moment here. I don't know what just happened there. All right, we'll try this again. So they had the money helping to support them while they didn't have to pay those largest bills that they would normally have to pay, right? Significant. Now the student loan moratorium. Now again, most of the country isn't under the mortgage and rent moratorium anymore. There are some places that still are benefiting from it, where they had high cases of Delta variant. And so the government kind of kept that in place for that. But your student loans, they still don't have to pay those until, end of January. So, you had government supplanting the payments that you were losing from work. And at the same time, we're taking away your two biggest bills, right? And so there was more money. And of course, that was more freely available, I guess you could say, especially because they didn't have those two bills. And so you have that, and then, you have these companies just start to get back up from the, many times the government forced shutdowns and whatever. So production's behind, but demand was still up. And so that, that had praises, we say inflation. I hate using the term inflation for prices. Prices don't inflate or deflate. They rise and fall. The money supply inflates and deflates, right? Because you either create more dollar bills, or you take away dollar bills, right? You don't add more prices or take away prices, right? The price just rises or falls. So I'm really a stickler about that. The idea that we have price inflation, we have price rises. And so anyway, in addition to that, then we have this whole idea of this delivery bottleneck, right? Ports are backed up. I know here in the U.S., we have a shortage of truck drivers. So even when things come in through the ports, how are they going to get from the ports to where they're trying to get truck drivers down, right? So, all that kind of adds to those prices rising. But it's not because, there's all this money floating around now and, more than there was before, and that's why it is. And so multiple things on there. And I think that's the point that I've been trying to get across. Not that I think it's the point I've been trying to get across for a while now. But, again, people just automatically assume because the Fed printed all this money that's why prices are rising. When you look at that, and very little of that really even made it out. Most of that stays in the banking system, guys, which means it's not out there. Unless the banks are making loans, that money generally stays in there. And, again, your money, your bank is the only place where that real money creation happens. Whatever the Fed creates, if it doesn't make its way out into the economy, it just sits there. It doesn't affect prices at all. It has to come through banks. Now, whether that's coming through banks making loans or it comes through banks via U.S. Treasury purchases, either way, there is no direct Fed to the layperson. It's got to go through the banks. So banks are where that real money creation happens. And most people, even when I explain this, still have trouble grabbing onto and understanding what I'm talking about. But that's the way it is. It has to go through there. The Fed cannot knock on my door and say, hey, here, Chris, here's $1,000 or something. It can't even knock on the Fed's door. It can't go up to the White House, knock on there, and Jay Powell go, hey, here you go, Mr. President. Here's a check for $2 trillion or something. They can't do that. The laws disallow it. Now, there are ways they've kind of gotten around that a little bit when you look at special purpose vehicles. This is something I talked about, a year or two ago. Because the Fed itself, the whole idea of this corporate buyback, this corporate bond buying thing, and how it appears to be illegal in terms of the law, but again, they kind of get around that, they think, by the Fed and the government working in cahoots to create a special purpose vehicle, which the money funnels through. I don't think personally that's legal as well, but it is what it is. It's what's going on. But the reality of it is, guys, with as much money as the Fed has printed, very little of it's actually made its way out here into your and my hands. Most of it, again, has stayed there with the primary dealers, which are basically your banks and whatnot. And they've gone on to buy treasuries. They've gone on to buy stocks, which is what keeping the zombie companies afloat between, with that happening with the Fed coming through special purpose vehicles to buy the corporate bonds. But that all is going to stop. And when that stops, the merry-go-round stops turning, right? And everything kind of goes down. And that's the whole idea of this deflation that I keep talking about is likely going to happen, right? So that's kind of where we are with it. A lot of moving parts, guys. Don't think that it's as simple as, government's printing money, so inflation or hyperinflation, especially hyperinflation. Don't ever compare what's going on in the U.S. with Weimar. I mean, it's so bad, because that just shows that the person doing that has never actually really studied Weimar and what was happening back then to any significantly. All they're saying is, look, the Weimar Republic printed all this money, and then they had hyperinflation. And look, the U.S. is printing all this money, and so they have hyperinflation. Again, guys, that's not the way that it just works there, okay? Let me see here. How do you hide stable coins? Man, I am not up here to tell you guys how to hide money from the government. I am not ever going to tell you anything like that. And you want to talk about an easy way to go to jail. I have no intents. I'm too pretty to go to jail, all right? You may argue with that. I happen to think I am, and I would rather not. So, let me see here. I'm just trying to catch up with you guys. Let me see here. Okay, you guys are talking there back and forth about inflation there and good stuff. Okay, good. Black Man's Guide, what's up, man? You need a good rant today? Well, there you go. I think I gave one earlier, right? Maybe one or two now with all this. No, inflation is, oh God. Hank, stop discussing things with who'd you say, your chief economist? Again, that's going to be dependent on how they study economics. Economics is and should be a humanities subject, right? It should be an art, not a science, right? But what has happened was governments have taken over economics and created econometrics. And econometrics kind of really takes away a lot of the whole idea of what economics is really about. Economics is about, that point between you and me when we make that exchange, right? It's that personal level. But econometrics comes in there and tries to use maths to define and redefine things. I'm not a big fan of that. I am not a big fan of econometrics because it attempts to I can't say the word. to hide what inflation really is, what it is. But inflation, basic way it's been understood through history, has been creating more dollars, and deflation has been taking away dollars. Price rises and price drops are just that. They're not inflation. So, yeah, inflation is the money supply growing, and I think if you start looking at anything else other than that, you give support to the idea of econometrics, which is really what's screwing us all up right now. Okay, and again, that's my opinion of it. Studying it all this time, the various schools, heterodox and more common approaches to it. So, again, the government has to make economics work for them. They have to be able to say, okay, well, we can figure out this at this level, and then we can call it this, and then we can use that to implement policy. And I'm not a big fan of that. And so, of course, in order to keep up with that, banks and everybody else kind of does the same thing. So, yeah. Like I said, Hank, you can keep, with this appeal to authority thing, or you can open up your mind and think a little bit more beyond that. But again, they're going to do things as they need to do it in relation to the way the government does it. Okay? I mean, that's their job. They can't do it any other way. If they do it other ways, they risk not being able to get the returns and things that they're trying to do. So, I mean, that's kind of way, looking for there, right? See, that's what I mean. The term for printing more money is monetary inflation. See, that's what I mean. That's exactly what I'm talking about. That's the only real inflation. Again, to inflate is to blow up, to add to, or to take away. You don't add to price or take away from price. The prices just rise or fall. You add to the money supply by creating more dollars or whatever fiat currency you're talking about. You deflate it by taking away those. So anyway, I'm going to leave that at that. I'm not going to sit here and argue about it anymore. But, again, guys, just the way kind of looking at it there. You can see, man, this is a great daily candle right here. Great bullish engulfing candle coming off this resistance as support here. So we'll look for that to continue to break out and head higher there. I don't foresee a reason at the moment why it shouldn't continue up. Everything's kind of leading up with it. But, again, we don't want to assume always that things are just going to happen just because we think they should. So, again, we'll continue to look at those breakouts and look for those targets that I've got on here. Again, this is the same chart that I put there in the weekly newsletter as it goes up here. So same one we're still looking at. Macro bottom potentially here. We've got this blue swing here. That target is up there at 97.77. If you want to look at this as a double-headed complex head and shoulders here, which it may be, you're going to have a target based on head of that up there around 98,695. First step in confirming this possible macro bottom here, again, is this 94.795 level here. So, that continues to be what we continue to watch. I mean, and as long as it continues going up, which it has, there's no reason to, to look otherwise with that. Let me see here. Asymmetric says mainstream person is just going to look at cost in their life of 40% and say, hey, my currency is buying me less. Yeah, exactly. Exactly, man. And that's the, and that's the whole thing. That's my point, online there. Everybody's like, government's printing more money. It must be inflation. It must be what's causing this. Because all I see are these costs going up, and they're not really delving in deeper to why costs are rising, right? So that's what you got to kind of keep up with here. All right, guys, let's go ahead and look here. We've got the winner of what we're doing here. Remember, guys, you have 7 days to get a hold of me. After 7 days, you lose out, okay? A week is more than enough for you guys to get a hold of me. So the software drew 3 names here. And so the top name, I'm about to show you guys, the top name won the PS5. I'm going to remind you, if you are outside the U.S. and you won the PS5, I'm going to substitute a 6-month Tier 3 membership because, again, the PS5 won't work for you outside of the country, okay? If you're in the U.S. and you win the PS5, you get back with me and let me know, do you want the PS5? If so, I'll send it off next week or maybe this weekend if I can get out this weekend. Or if you would rather have the 6-month Tier 3 thing, you tell me that and I'll do that instead. So that'll be the top one. The middle one is going to be the 1 year. They want a 1 year Tier 3 subscription. The one on the bottom, the third one there, won a 6-month Tier 3 subscription, okay? The good thing is, guys, if you didn't win this week, we've got many more weeks of this still coming up into December, okay? So just watch. I'll let you guys know when the next giveaway is, and you can enter that as well. So here we go, guys. Boom, there it is. And let's see here. This email address right here, vinihadad at hotmail.com. You won the PS5 or, again, the 6-month membership. What is this? It looks like it's Decio Ganat. So DECIO _GANANTE at Hotmail. You won the 1 year membership, Tier 3. And then Lee and Kathleen won the 6-month membership there. So, again, guys, you've got 7 days to get back with me. I'll go ahead and march these as well on our social media properties. And just get back with me, and we'll get it all set up for you. I will have a new drawing set up today, and it'll work the same way, guys. And so what that means is when you go to do it, and let's say you're already following me from the last one, you're already following me anyway, just click on that link to get your extra entries in there. And then, of course, it'll take you to there and then recognize that you're already there, and so you'll be good to go. If you're not, of course, you do have to do whatever it is, follow or like or whatever the thing happened to be for that to get that credit there. By the way, guys, do not forget, I had a lot of people who didn't confirm their email addresses, their emails. We set this up because of the various laws throughout the world. You have to confirm those emails that get sent to you. That email when you enter, you have to confirm your email address with that. If you don't, it won't allow you to win. It's just, again, that's protecting us because, over there in the EU, over that area, you got all those privacy laws and everything. We have to do that. So make sure you guys are doing that, all right? So there you go. Congratulations. Exciting times. Hopefully exciting times for you. And we'll get at it again later today for the drawing next Friday. And I might actually add in something extra this week. Or maybe do a couple extra drawings in with it. So make sure that you guys get in there, okay? Let me see here. Can I hide the domain names next time? The domain. Oh, you mean for the email addresses? Okay, yeah. Let me see how I can do that next time. Yeah. Okay, I see why. I guess you're thinking spam maybe or something like that. Yeah, I mean, I just do it here on live here, guys, so that way you understand that it is actually drawn and whatever. There's no no hinky stuff kind of going on. But yeah, I understand it with spam mail. So yeah, let me do that next week. Thank you for bringing that up. That's a good idea. I'll see how I can potentially do that next week. Protect those email addresses a little bit more. Okay. Or the IP addresses too, all that kind of stuff. So we just get like the first part of the email address. Okay, guys. So, yeah. Last thing I wanted somebody going here. Oh, you didn't really do that. You just gave it to your friends or something silly like that. It doesn't benefit me any to give it to my friends. It benefits me more because my friends are already part of what we're doing here, right? It benefits me more to have new people coming in and doing well and learning and then going, oh my gosh, yes, it's legitimate what he does. It's real. It really works. But some people don't think that way, and that's okay. I just want to make sure everybody knows that we are being legitimate here, okay? Let me see here. All right, so yeah, good suggestion. Thank you for that. I appreciate that. Always trying to learn here, guys. First time I've ever really done big, huge giveaways. We've done little ones before, but this big one, so doing it here. Sheepdog, love what I'm doing. Loves what I'm doing. Really learned a lot. I'm glad to hear that. That's what it's all about. That's what it's all about, right? Let me see here. Maimed your bunny for no reason, Bianca. Oh, that's awful. Don't do that. Hey, Raisky, thank you, my friend. I appreciate that. Yeah, man. 4 years anniversary here. 4 years in a month and some change now, man. Doing it. Okay, so let me kind of catch up with what we're doing here now. Okay, so let me talk to you guys. Again, the inverted yield curve, right? So I've kind of mentioned that a few times. And so, again, basically, the inverted yield curve is this idea that the economy is going to run into a recession, that interest rates are going to rise. And the idea is that governments raise interest rates when inflation is running too hot. And that leads to a slowdown. And so it slow down generally because historically it doesn't just slow down; it reverses and heads into a recession, right? And so that's why the inverted yield curve is so well watched, right? And so again, it's not something that happens all the time, but they have preceded every recession that we've had since 1956. Every one of them. Like I said, the average lead-in time is about 14 months. But there have been times where it's happened pretty quickly and other times where it's happened a little bit longer than that. So it gives you that average of about 14 months. That does not mean you don't have to worry for the next 14 months. Okay? That means you're given the warning now with the inverted yield curve, and you should be paying attention now, especially so to the market. You should not be blindly, the market's definitely going up and I'm going to make all this money forever and ever and ever kind of thing. Okay? So yeah, you want to make sure that you're with it. And so then I usually get the question, so if we do hit a recession, what should we do? Well, cash is king, guys. I'm going to tell you right now, cash is king. What happens in a recession is that people hold on their stocks and stuff, and then they end up selling at a loss, which just exasperates the recession until everything eventually balances out. The last thing you want to do is hold on through a recession because it's going to, you're going to be selling at a loss, right? And so that just hurts even more. And here's the thing, guys. If this is worse than a recession, if it's like I think, and we're going to have a depression of some sort, it's going to be even worse. People are going to lose jobs. Companies are going to go out of business. Now, the companies go out of business. Think about this. We have a lot of these zombie companies right now. Zombie companies should not be around. But they're being propped up by the Fed's purchase of their government debt, or of their corporate debt, right? So when the government stops doing that, which they're going to have to, they can't do this indefinitely. When they do, those companies, if they haven't done anything, if they're still just zombie companies, they're going to go out of business, right? And so then people go out of business. And people who have invested in them lose money, right? So all of a sudden people are losing money. And of course, they're losing money with the rest of everything else that's going on, in the markets. And so cash is king. You want to try and get up at or near the top. You're not going to get out at the top, most likely, right? So the important thing is to zoom out and just find a good place to exit, right? Make sure you're exiting with cash. Cash is the thing to be. Now, if you're insistent on getting into something other than cash, right, while you're doing it, if there's a recession or something like that, generally you want to look at like federal bond funds, municipal bonds, maybe taxable corporate funds like that, money markets, dividends, utilities, maybe a large cap, but really you're kind of looking at those, at the further removed they are from government as far as bonds go, the potentially more risky they are. Not that they're risky, but just, you would get, you have a safer with the government versus municipals or something like that. But if you're looking to put it in, say, stocks of some sort, the things, we've talked about this before. Even when you have recessions and stuff, people still need healthcare, right? So you look at healthcare stocks, right? Consumer staples, another big area there. So you're looking at, things where, people are still going to have to eat, right? but they're going to go, you're not going to say, oh, well, people need to eat, so they're going to buy, they're going to eat out. No, people are going to start cooking at home more. So you want to look at maybe like grocery stores or stuff like that. You still need your personal products, right? Or your household stuff, right? You still need your garbage bags. You still need your lunch bags, your paper lunch bags. You still need your deodorant, stuff like that, right? So companies that are in with that, right? The other big thing is during a recession or depression or whatever, people still need their utilities, right? They still need their water. They still need their electric, stuff like that. So the idea is that the money is going to go toward, the money that people have is going to be spent on the things they need versus the things that they want. So these are the types of stocks that you may want to get into. So again, utility companies, stuff like that, right? If people are buying stuff, they're probably more likely to go to your lower priced outlets. So again, those of you who've been with me a while, that I talked about during 2008, Dollar Tree, I believe it was, had great growth during that drawdown, right? During that 2008 into 2009, where everything else was dropping, they were rising well. So you look at something like that, Dollar Tree, Dollar General, maybe even like a Walmart or something. Low prices is what you're looking for. I'm not sure what other things there are outside of the U.S., but the same idea, guys. Whatever country you're in, look for these same ideas, right? This is generally what you're looking for. Let me think here. Maybe like home improvement places like Lowe's or Home Depot or something, because people aren't going to generally have the money to get other people to do their thing, so it becomes do-it-yourself projects, right? So maybe something like that. But that's kind of where I would look. If you are to get into that, I think that's kind of where you probably should be looking. I think. I'm trying to think if there's anything else in particular off the top of my head. No, just healthcare, consumer staples, utilities, low cost stores. Yeah, those would probably be your biggest things. A lot of people talk about, when bad times come in, people tend to drink more. So maybe if you're looking at some kind of alcohol or something, maybe, sadly, I saw something the other day that said smoking has been dropping, or at least here in the U.S., since 2020. And this is the first year where they've seen a rise in smoking. Yeah, pharmaceuticals going with your your healthcare. Yeah. Try not to be in debt, man. Remember, see, the whole thing is, if you've got a debt-based economy, which most of the, which is what we look at in these first world countries, right? The U.S., UK, all these things, right? And so the benefit of a debt-based society is that you inflate away your debt, right? But if you have a deflation, your debt costs more. Remember, we talked about it in terms of dollars, and you're talking about U.S. debt, right? Are stable coins too risky? Crypto in general, I think would tend to be a risky thing to be in if you have a recession or a depression. Again, because the thing that we enjoy about crypto is the large moves it makes when everything's going well, right? But you're going to have you should have that same opposite effect, though. The same but opposite effect happening when the economy goes the other way. You get out of your risk stuff, right? So how will that affect stable coins? I think the biggest affront to stable coins right now is government. I think right now government regulation. Now we also know that when the economy goes off a cliff, when a recession or a depression comes in, governments tend to enact more laws, right? And so my expectation is that if we have something like that, then the government's probably going to come out and put more restrictive laws on cryptos and whatnot. So I'm not too sure stablecoins will be all that safe. I mean, I think they would be safer than, your other crypto, your Bitcoin, all kind of stuff, because again, the idea is that they're supposed to hold value. But I think they have that risk of government intervention that might derail them. I think that's probably the big risk there. Yeah. So yeah. I think that would be the biggest issue that you would probably have to watch for. Again, all things held equal, if government doesn't come in and regulate whatever stable coins, which I think they're going to, just because it's their business, right? Central bank stable coins, right? Competition, stuff like that. So I think government's going to regulate them and restrict them in some way, and I think that's the real risk. But I think if they don't, and the stable coin is properly done, I don't want somebody who invests, so much of their reserves into debt that the debt, becomes bad there, in a recession, and then all of a sudden their stable coin isn't backed like it should be. It causes a run on all this kind of stuff. Yeah, I wouldn't want something like that. But even that kind of could have bleed over effects on, even legitimate stable coins that are, maybe truly backed by one-to-one. So yeah, Euro, exactly. That's what I'm thinking when I said that. Tether, came out with the fact that a lot of their reserve is debt. They've refused to tell you where the debt is from, and so we don't know. If the debt is, say, Apple or something, something big and significant that people, that's going to serve what people want to do. Well, that's worth more. But if it's from something like, Bitfinex or Evergrande or something like that, it could be a lot more detrimental to it. And so, I don't know. I think me personally, I'd rather have it's just in dollars. Personally, it takes away so much more risk. Okay. Ace and Risk says, oddly enough, Charlie Munger, which is, if you don't know, he works there with Warren Buffett. He said he pushed me over the edge for crypto. He said, show me the incentive and I'll show you the outcome. Let me see here. Yeah. It's real questionable. I'm not a fan of Tether just because they're so secretive. I mean, they may be on the up and up. We said this before, and then we found out they really weren't. But even with what we know now, maybe they got good debt. I'm not, their track record is not very good. And so, if we have a recession, it's possible that even if they have good debt, it could still be difficult debt. It could still be difficult for them to get that, right? So yeah. I think, guys, I'm going to be honest with you. I've said this before. I don't hate crypto. Some people still say that. I don't get it. You're not listening. I love crypto, and I hope it does extremely well because I've got a lot of investment in it. But I'm not going to blindly just think it's going to be it, and that's it. That's going to happen, and that's it. I've been around too long to do that. That's silly. And there is a lot of contagion risk just in general with crypto. Everything is so interconnected and so weirdly done up that, some kind of big thing just could lead to this huge decimation of the crypto market. Now, again, that doesn't necessarily mean that cryptos need to die off completely or anything. But, the possibility is there. And I think you have to be a realist. I mean, you can be like Rob Paul, who says, he has all this money in Ethereum and he, irresponsibly long. But I also have to question if he's not trying to influence people to purchase, why is he talking about it so much? Right? So he makes these, and don't get me wrong, I like him enough. And I like what, generally what real media tends to do, though I think it's really getting kind of biased. It tends to happen, right? But I do grow concerned that he's making such a big deal about his Ethereum thing. I mean, he said it there. It's been everywhere he said it. There's no reason to keep pushing it, especially if it's something that you're in, right? unless you're potentially trying to use your clout to get more people into it and do it. And that way that boosts your position in it. That concerns me. I have to be honest with you. That concerns me. So he has a big following, a very large following. And so I don't necessarily think that's the most ethical thing to do. I'm glad he's told people he's in it though, instead of just saying, doing all this pumping, saying all this good stuff and then just failing to tell anybody he's in it. But it seems to me like lately, like he's saying it more and more and more lately. And that just kind of concerns me. It kind of concerns me about it. I'm not sure. It seems like there's an angle there. I may be wrong. But I am a very risk-adverse investor trader. And so when stuff starts popping up like that to me, I step back. I'm really cautious about stuff like that. You guys do what you need to do. I'm not here to tell you not to or to do it. I'm just explaining, my experience and why that leads me to my thoughts on it and what my concerns are. Not to influence you to, be concerned or not to be concerned, but just to give you another way to think about it. Yeah. Let me see. Let me kind of catch up with you guys here. Okay. You guys are just talking about the different stable coins there, right? Let me kind of see here. Leighton, what's up? He says, was listening to Jeremy Allaire from Circle, and he was putting up a pretty robust defense of USDC and its backing and how they welcome the most robust regulation as institutions want stable so badly. Yeah, I talked about that back in the day about how I would prefer USDC over USDT because it's more transparent. And that just for me again, it's that whole my risk aversion. So we'll see what happens with it. I don't know that all of them are completely one-to-one dollar based. I think all of them have some sort of paper. I think I may be wrong on it. You guys have to check on that. I think they may all have paper, or most of them anyway. The more paper they have, I think the more concerned I would be. If I'm putting my thought is if I'm putting my faith in a dollar pegged coin, then I want to know that they've got a 1-to-1 on that, because anything else is risky. And the more paper they have, the more risky it becomes if things happen in the economy, right? If things happen negatively in the economy. So yeah, those are kind of things I think about. Let's see here. If the stock market tanks, which exchange is best to have your dollars or euros? This is Coinbase. Honestly, I don't know. I can't give you this great answer for that. I think Coinbase is probably one of the better ones because they are so strictly regulated, with the U.S. because they are a money services business. So there's a lot of excessive regulation that they have compared to other ones. I would think probably the less regulated it is, the more concerning it would be to be in it if everything just tanks. Regulation gives you at least some sort of legal fallback potentially as well. And so, you kind of want that. It doesn't guarantee that, that if anything happens, if there's a hack or something, whatever, you're going to get your money back or all this thing, depending on what those regulations are. But at least you have something legal that you can grab onto. I'd be fearful of an exchange that doesn't. And you run into a situation like that. So, yeah. Let me see here. Just kind of catch up with you guys here. Yeah, there's the one concern about USDC. BlockTech brings up they can lock your wallet. They can lock your USDC in your wallet. He says, I'll pass on that, to be honest. Yeah, I completely forgot about that. Exactly. USDC does, because it is, it deals more with the regulations and whatever. The government can have them lock it there, right? And all of a sudden you lose your money. Yeah, that's not good. Um, guys, you have to understand, if you're in crypto, you are in risk. That's all there is to it. Crypto is exceptionally risky just being in the market. Much less you become more riskier the more, depending on what you're actually getting into in crypto. Just being in crypto itself is extremely risky for these reasons that we talk about. And so it doesn't mean you can't be in it, guys. There's a lot of money to be made with risk, right? The greater your risk, there should be a significantly greater reward, right? Limited risk, limited reward. Greater risk, greater reward. But people tend to ignore that greater risk part. They just look at the reward. They go, man, I can be rich. I can buy a Lambo or something if I'm in Bitcoin. But they ignore that requires more risk. You have to be in the crypto market to begin with, which, as we've shown, isn't necessarily conducive to being risk adverse, right? And then in that, depending on what you're getting, especially if it's not Bitcoin, if it's some lower tier type thing, a lot more risk involved in that, right? Yeah. So, people just, the things you guys have to understand is most people that come in, at market toss when things are frothy, whatever, they rarely even consider the risk they're taking by entering the crypto market itself, just being in it itself. And now it doesn't mean anything nefarious has to happen, but it does mean that you can't ignore the fact that there's that possibility. You've got to be, again, guys, I talk to you often about being honest and lying, and the differences between being honest with yourself and lying to yourself. It's okay to get involved in risky things. It is okay. But you just need to make sure that you understand the risk that you are taking. And you're not just playing it off, ignoring it. That's why people lose their shirts. Okay? So just some things to think about there. Just as much risk keeping your money in a bank if it's a recession? Not at all. Not at all, Andy. Because if there's a recession, your fiat is worth more. The flight of safety is toward fiat. So, one, the value of your dollars here in the U.S. increase. Two, if you're in an FDIC regulated bank, you're protected up to a certain amount. So if you have more than that 250,000, or as a couple at 500,000, you want to understand how to put your money safely in it to continue to get this protection. I mean, if you put $1 million in there, you're only protected up to if you're single, 250,000, right? But that's guaranteed protection. If you're FDI insured bank, if your money's in there, you're not losing that 250,000. Now, again, the idea is if you have more money than that, you want to talk to a good lawyer about that to figure out what kind of trust or things do you do to make sure that you can have it in there in different ways that continue to protect those aggregate amounts, or those regular amounts, so your overall aggregate is protected. Okay. That's here in the U.S. though. That's here in the U.S. As Leighton's pointing out, he says it's only a few years ago that the Greek government locked people out of their accounts, and that's legit banking. So there is that. If you're outside the U.S., I can only speak on the U.S., guys, and what we've got going on here. And sure, the government can potentially do whatever it wants. So there's always risk in life, right? You just have to be realistic about what risk that is and how much it is and what kind of, what are you exchanging that risk for? You have to be, guys. If you're not even with just your money, just in life, life can end up being really bumpy, traumatic road. Okay? So yeah, just some thoughts there. But yeah, again, if there's a recession, in some other country, again, there might be like was pointed out with the Greek government there might be something else that you have to worry about. Just here in the U.S., you by law are protected up to $250,000 of your deposit, of what's on deposit with an FDIC insured bank. So yeah. Just some thoughts. Let's see here. So SHIB, what's going on with SHIB, man? There's SHIB. Now, with SHIB, it could be complete. I can get 5 up through here, We have a divergence in volume and a divergence in RSI. And we've got a bearish breakdown crossover here on the Stochc RSI on the daily. Could be complete. But as always with these big moves, there's the chance that it's got some weird count going in there that isn't inherently noticeable. And if it does break out above this swing high up here, my two targets are 97.16 and 11.160. Those are my targets there. You know, 0.0000, yeah. So, I mean, you know, again, I am paying attention to the fact that we do have a divergence in volume and that we do have a divergence here on the oscillator on RSI. So, I think really, you know, if we're kind of dropping below yesterday's swing low there at 5,700, I think that starts to open up a stronger possibility that we're coming down. Now, if we are coming down, you know, generally we look for wave 4 of the lesser degree. So you get this A, B, C, D, E kind of thing here. So it's right here around the 70.5 at 24.87. But, you know, coming down, you might want to also look right here around the 50%, which is at the EQ of this previous daily supply structure. It's now a demand structure. If we're going to come down further, though, we probably would have here and a bounce and then coming down toward that area. So, you know, again, things are suggesting that a top may be in, but it hasn't continued to break down from that. So we'll have to see how it plays out. This could be, you know, this could be maybe a 1, 2, 3, 4 here leading up. Or a 1, 2, 3, 4 leading up to a 5. And again, that's when we start having these other kind of targets going on here. I guess if this was to be like a 1, 2 here, and again, it's, you know, it's too early to figure all this out. But if that tends to be a 1, 2 right there, you know, again, looking up here toward this 11.160, 11.2 area kind of area. Now I'm just drawing this quick, so it's gonna come a little bit off there, but you know, we might see that, and that's only if it extends to as we would normally extend it. Many times a wave 5, you know, it ends up as an ending diagonal or something, or it just overextends and continues higher. So, you know, there's a possibility on that. So again, looking for, if we get that breakout there, those are the two targets I'm looking at. But if we continue to break down below that swing low, then we're looking down here and potentially even here. And it could go lower. It could go lower, but our first targets are generally going to be, you know, it's usually wave 2 comes back to wave 4 the lesser degree. And so that would get you down there around that 70.5. Could go lower to 78.6, 85, all the way down here to 90, whatever. But generally we would expect that. And then my special one is just the fact that we've got this demand structure here around that EQ at basically 4,100 to 4,200 kind of area. We could see, you know, it get there and get a 2 there and then up. By the way, this doesn't have to be anything that happens like this right here. As a matter of fact, with this happening here, it might take a while to get on back down here as people continue to buy in, thinking it's going to keep rallying. And so it slows down the decline as they get sold into. You know, or it slows down the decline as they buy into what's being sold. So, yeah. Let me see here. XRP Bandit, what's up, man? Good to see you. Dimson, what's up? Hey, Claudio, have a great weekend, my friend. So, yeah, you know, that's where I'm kind of with SHIB right here. I'll be honest, I missed this. You know, I wasn't paying attention. This would have been a great a great move there. You know, could have increased quite a bit, but I'm not too worried about it. Again, you know, most of y'all get upset when you miss something like this. But that's just the belief that, you know, again, we've talked about this before. You're just believing that not only in the markets, but in life in general, that things happen to you, that you don't control things. And so you see it as something special, and that's why you have this fear of missing out on stuff like this. But once you change your thinking in life and you understand that that you create the things that happen in your life, that you have some play in them, and that you can change your life however you want to. Once you do that, then you look at the market, you go, okay, yeah, I missed it, so what? There's always opportunity. There's always opportunity. It's not a big deal. And so hopefully you guys get to that point. I really hope so. Because it's a pretty great way to live, honestly. TLT, man. So you got your bonds there. I think we've got potentially wave 2 down here. We got a 1, 2, and then a 1, 2, 3, 4 maybe here. I've got a wave 3 up here to around the R1 pivot on the daily, which is right around 149.5. So we'll see if we can get that. If we can get that 5 up, that should be a good signal that that bottom's probably in. But really, we need a breakout above wave B resistance here at 151.79. Remember, the idea is that people go into TLT because they're getting out of. Remember, TLT is your ETF for your longer-term government securities, your 20-plus year government bonds, right? And so and what did we have? We had the flip, right? But anyway, the inverse, right? The inversion on the yield curve, 20s and 30s. But this is your 20-plus year bonds, the ETF for that. And so the idea is when people are fearful of what's going on in the economy or whatever, they get out of the risky markets and they get into the safer TLT there. Now, something I haven't looked at in a while, guys, is TLT versus junk. Let's see here. There we go. Oh, man, let's see here. Let's see what we've got going on here. And this is, again, the same idea here, that you're moving from, if you become more fearful of the overall economy, if you feel like the economy's starting to slow down, if you feel like you're becoming a risk-off environment, then you're going to move out of corporate debt, say MicroStrategy, right? They sell all those bonds so they can buy more Bitcoin. So you get out of corporate debt like that, and you get into, again, government securities. That's the idea. So what happens here is as your TLT junk ratio rises here, it means risk off. This was February into March 2020. Right here. When the markets tanked, boom, they went up, right? And so the markets have gone up since then, and as a result, risk on, right? This drops. Markets are getting more concerned here, and so we're getting this move up here. Now, right now, it looks like it may be just in 3 waves. So 1, 2, 3. But again, we're getting a pullback here above this. Looks like a 1, 2, 3, 4. Probably getting a 5th wave coming up. And so, again, that would signal that people are more fearful of the economy. They're taking a more risk-off approach, which means money coming out of things like, corporate debt. Corporate debt's risky compared to government debt. And so if you think that the economy's slowing down, or you think there's going to be some kind of recession or something like that, you're going to start taking money out of your government or your corporate debt and putting it into government debt. Protect your money, right? You're here because Mark C. referred you? Well, hey, man, great to have you here. I'm glad. Mark's a great guy. So good to have you here. Take the exchange with the longest history. Oh, you're talking about different things there, right? Okay. It's great having you guys check in, honestly, man. Again, I'm not here to blow. I always say it, guys, I'm not here to blow smoke up your rear ends. I'm here to hopefully give you a more balanced, more logical approach to what's going on. Something outside of your social media feeds and whatnot. Because, again, those tend to be echo chambers curated by the AI to give you what they think that you want to see. And they're usually quite correct on that. But it's rarely what's actually happening. But, yeah, so here we are crossing bullishly on Stochk RSI. And curled up here, running up. We've got RSI running up here on the weekly. And again, looking to make that breakout through the top here. If this is a wave 4 on this pullback here, gives us a wave 5 probably about 1.46 on that ratio. And again, the idea being that your TLT junk ratio, as it rises, it signals that you're getting to a risk-off environment. As it drops, it's risk on because you go from TLT to junk or the other way around, right? So since TLT is the leader in this, then obviously as it goes up, your TLT is increasing, your junk's decreasing. When TLT increases, it generally means more risk off than risk on. All right. Let me see here. And that's getting me just about done here. Man, oh man, let's even pull some up here real quick. So big move in the dollar today, of course, leading your gold and silver down. Let's see here. So silver, let's see here. There you go. Had some nice droppage here. Still lower lows coming in. So silver, I'm expecting to drop more. What we need is a drop below this wave circle B support at 22.325. If we do that, that's going to add confidence to the count. The idea that this is a this barely missed wave 2 here, but it's a 1-2-1-2 here, potentially heading down. And so we want to, if we get through that, then we'll be looking much lower there for silver. Gold, same kind of idea. Let's see here. Again, strong impulsive decline here, strong impulsive drop coming down. This is the 1-hour chart for gold. I think maybe what we have here is a 1 with a flat for a 2. And then we have a 3. And so 3 should then target generally this wave B support area at 1760. If we're dropping below that, then that kind of adds confidence to the idea we've got locally here a 1, 2. And then we get a 3 on down here, minimum 3 around 16, 10, 20. And so that's what I would be looking for if we get that continual going on with that. Oil. Oil. Let me see here. There we go. Oil's still doing its thing right here. I've got it potentially ABC done right here, but leaving it with this some room to come down here if it does come down. But if we're breaking out above this swing high here at 84.88, that should indicate that wave 4 is done, and when we've got wave 5 up here. Now, if this is an ABC down, then your wave 5 target generally would be expected to be, as you see up there, I've got it just a little bit off there, right up there at that 88.67. You can watch 86.61 along the way as well. You could get a short wave 5 that hits that, but I'll be looking at that. If price is dropping, where it is at right now, I've got a 3 and a 4. If it reverses and drops on down below wave 4 here at 74.96, that'll suggest that wave 5 is done here. Okay? But as long as it rallies back up above wave, parentheses, Roman numeral 3, prior to dropping down below wave 4 to the lesser degree, as long as it rallies, even if it comes up here and comes back down and then goes up, as long as it does it prior to this level, wave 5 is still in progress there and heading back up. But oil is probably getting long in the tooth. We're, again, targets are near 90 now. We've rallied out of that May 2020 negative 40 low, negative 41 low. So, again, as I've mentioned previously, we might hit that 90 to 100 level before it does. So we just continue to work with it as price action unfolds there. We'll see if we can get that. Let me see here. So that gives us that. The Dow Jones, by the way, like I said, guys, 92 years ago, yesterday, today, somewhere right around there, the stock market dove for, the lead into the Great Depression. Remember I told you the stock market top happened in August, and then it dove down there in October. And so, we don't see that happening just yet here, so we'll see what happens. Right now, I've got this. This is the Dow Jones. I've got this as potentially 3 down here, so A, B, and then 1, 2, 3, 4, 5. And so a breakout above wave B here at 35,858.18 gives us an initial target of 36,137, secondary target of 36,354, and then we'll have to see, if it's done. So we'll see what goes on there. Weekly, we're nearing overbought. Overall, kind of decreasing on RSI there, while price is heading higher. This again was that March 2020 low here. So we've rallied up out of there. Again, wave 4 is this right here. It's a inverse symmetrical triangle, or a we can call it megaphone pattern. And so that gives us an A, B, C, D, E. Wave 4 finishes there. We're just working on wave 5. So that's kind of where we are with that on that shorter time frame there. And finally, we can jump over here to the NASDAQ composite. Take a look at that here. Let me see here. There we go. Now, it's possible maybe we've got a 1, 2, 3, 4, and a 5, and we're done or just about done. But I've still got targets up here at 15,555 or a secondary target up here at 15,790, depending on how this goes. If we get a drop down below this wave 4 here, I mean, like I said, technically 1, 2, 3, 4, 5, ending diagonal, it could be done, right? Or getting done. So you get an A, B, C is 1, 2, A, B, C is 3, 4, A, B, C is 5. If we drop on back down and drop below wave 4 here, 15,198.23 cents, that will say that wave 5 is done. And if the count is correct, then that will be it. That will be the macro top. Now, the count could be wrong, right? But that's what we're going to look for. We're going to, I assume that the count is correct, and then we look for our invalidation levels, our validation levels. If it does this 5 waves up, pulls back, and then heads up again, then it's just wave 1 of 5. So wave 1, 2, 3, 4, 5 as it heads up. Okay? So that's how I'm looking at it right now. But if we, we have a pretty clear 5 waves up now, which I expect this one is an A and it's working on a B, and then we'll still have a C coming up. And so if we follow that with a drop down below that wave 4, to me, that's going to say, okay, well, we're done now. That gives us our 5 up, right? Potentially. What we really then want to see is a drop down below this wave parentheses 4 over here at 14,180.169, because that's your wave 4 of the larger degree. Dropping down here just says wave 5 can't continue any higher. So, I mean, realistically, until you drop below wave 4 here, this could just be wave 1. Like, we could get this done here. It drops back below wave 4. It's potential that the top's in, but then we need to see it dropping down below wave 4 here, because this could just be wave 1 of wave 5 here. Wave 1, 2, 3, 4, 5, still to go. Okay? But we take it in steps as it plays out. That's what we're looking for. Okay? So, yeah. So, anyway, there you go, guys. I'm over, so I'm going to get out of here. I really, really hope you guys have a great weekend. I really hope you take some time away from all the charts. Put down your phones. Spend time with your loved ones. Let them know you're still alive. You still exist. And really, guys, if you get nothing else from me from this entire thing, let it be this one thing. Speaking as a parent, make sure you make time for your kids consistently. That means putting down the phone. If you're in the same room with them and you're watching your phone, you're not in the moment with them. I honestly believe a lot of the problems we have in the world could be really helped out a lot, really kind of taken away a lot, if people would just be there with their kids. It does such great things for your kids' emotional health. Okay? Family means everything, guys. Trading means nothing. At the end of the day, you should be trading to have more time with your family, to have more money, or maybe to find a family, right? But it really is the end game, I believe. Okay? So I hope you guys have a great weekend. As always, remember, the only thing you control in the market is how much you lose. That's it. So risk management, no matter what we talk about all day here, at the end of the day, risk management is actually where you make your money. It is the most important thing you will continue to do day in and day out as a trader. All right? Or an investor or whatever else you want to be. That's where you do it. Okay? I will post a link later. I will post the winners on our social media accounts, and then I will also post a new drawing for next Friday, and I'll see if I can add some more stuff in there too. Maybe draw some more people, okay? All right, guys. Have a great weekend. If you're in Discord with us, I'll see you guys over there in a bit. Take care.